么接下来一样呢是我们的论坛。这一场论坛呢，我们会有7位嘉宾在台上。那么这一场论坛主要的主题呢是 Reimagining a Blockchain-Enabled Financial Infrastructure. Ladies and gentlemen, we're going to move on to our next panel discussion this morning. The topic for this panel discussion is Reimagining a Blockchain-Enabled Financial Infrastructure. Again, if I hear your name, please proceed onto the stage. First, let us welcome our moderator, Malikkhan Kotadia, Finnovation Labs and Head, International Relations, Singapore Blockchain Industry Association, Access CEO and co-founder. Good morning. Let us welcome Emma Tui, LongHash, Singapore CEO. Good morning, Emma. Next, let us welcome Ryan Xu, Shubao Global Digital Asset Exchange, CEO. They're all taking pictures right now, so I'm just going to go on and read the names. Chen, DDT at Cathay Financial Holdings, Senior Vice President. Saint H. Lee, DarcMatter&Konstellation CEO. Jonathan Ha, Redpulse and Leisure Capital Foundation /CEO and Managing Partner. Lastly, Jeff McDonald, co-founder of NAM Foundation. Again, a topic is reimagining a blockchain-enabled financial infrastructure, and I'm going to pass it on to our moderator, Kotadia. Thank you so much.
Thank you. Good afternoon, everyone. Good afternoon. Well, hopefully we'll get some energy going. We've had a very interesting morning. We saw a very, very heated ideological debate. We're going to slightly change track from there, and we're going to get real now. We're going to talk about what works, what doesn't work in the context of blockchain when it comes to the financial services industry, and we'll also try and address the why of that. To take me along on this journey, I have 6 fabulous and very, very diverse and experienced panelists here. So without further ado, I would request each one of them to do a very quick 30-second introduction, and then we'll jump into the what, how, and why.
Thank you, Malik, and it's a great pleasure to be here. My name is Emma Tui. I'm the CEO of LongHash Singapore. We are a global blockchain incubator that provides seed funding and also venture building support for early-stage blockchain startups. Prior to this, I was working at McKinsey for 2 years, and prior to this, I spent 8 years in financial industry.
Sorry, my name is Ryan Xu, and I'm the CEO of Shubao Cryptocurrency Exchange. And Shubao was founded by Taiwan Jifu Group, which focuses on PE fund, private equity fund management. And sorry, I have to leave my notes since this is a crazy week, blockchain week. So there was so many parties last night. Yeah. So
I hope you don't have a hangover.
Yeah, thank you. And technology was supported by Huobi, the top 3 global exchange. And we already serve hundreds of high net worth individuals in Taiwan, which own $1 million each one. And we love to, we will strive for providing abundant trading tool and cryptocurrency financial product in Taiwan in the future. And I have, furthermore, I have several years in banking industry, including Citibank and China Trust Bank in Taiwan. So this is my short introduction, and I'm looking forward to share more point of view today. Thank you.
Thank you.
Hi, good morning, everyone. My name is Chen. I'm currently working at Cathay Financial Holdings, Data Digital Technology Department. We're actually interested in exploring blockchain technology and its applicabilities so we can position ourselves better when the opportunities come. So it's really a great pleasure to participate in this event and be surrounded by so many smart and brilliant people with lots of enthusiasm. So thanks for having me here.
Thank you.
Hi, everyone. My name is Sang Lee. I'm the CEO and co-founder of DarcMatter, which is a New York-based alternative asset distribution platform. We've been operating for 5 years. We have LPs and investors from over 62 countries. We also have a blockchain subsidiary called Konstellation, and that's building blockchain infrastructure for the financial services industry. It's based in South Korea. Really excited to be in Taiwan. It's my first time here, and hopefully we can have an opportunity to share some interesting thoughts for everyone here.
Hi everyone, my name is Jonathan Ha. I'm the founder and CEO of Redpulse. It's a tokenized financial content ecosystem. I'm also a managing partner of Ledger Capital. We are a digital assets advisory and investment firm. I have a background in management consulting for about 12 years, studied engineering economics undergrad, MBA, CFA, and great to be here in Taipei.
My name is Jeff McDonald. I'm the co-founder of the NIM Foundation, and NIM is a multi-purpose smart blockchain launched in 2015. I'm also the co-founder of LuxTag.io. We do certificates of authenticity on the blockchain, and I'm super happy to be here.
Thank you, and my name is Malik. I'm the co-founder and chairman of Finnovation Labs, which is a Singapore and Southeast Asia-based fintech and blockchain venture growth company. And I come from a pretty deep and long banking background. I was in financial services for 18 years, 14 of those with Citibank in digital banking. And it's my pleasure to be here, back in Taipei, a place I love to be here. I was here at ABS last year as well, and love the place and the wonderful people. So thank you for inviting me here. As you can see, we have a great panel, very diverse perspectives and very diverse backgrounds as well. So let's try and draw in from that experience. And the first things first, you know, the elephant in the room, applications of blockchain when it comes to financial services, when it comes to the industry. No talk of theory or philosophy or good or evil. Let's talk about what is happening, what is not happening, and why. As they say, the best blockchains or the best blockchain applications are the ones where the consumers don't even realize it's blockchain powered, or there's something called blockchain running in the background. With that context, I want to open this to everybody to share one or two use cases of blockchain which are currently happening and which are currently successful in the financial services industry. And why would you say that blockchain is a better solution as compared to existing legacy systems or platforms or technologies? We'll start with the lady here. Emma.
Sure. Happy to share my view. First of all, I think success is a very subject term. I mean, we're fundamentally in this industry because we're convinced by the potential of how blockchain can change the entire infrastructure of the financial industry. And why do I say that? Because when you look at financial industry, what are the infrastructure? It's the payments, it's the taking people's deposit and being able to lend it out, it's the wealth management platform. And so all of this, we've seen potential POCs and disrupting power of blockchain technology. So in payment space, I think we've looked at how the existing infrastructure providers such as SWIFT, MoneyGram or Western Unions are looking at how to use blockchain technology to enhance the efficiency. Or you look at tech companies such as Facebook, which is, the Libra, one of the most talked about topic of the last couple of weeks, going to, rebuild a set of financial infrastructure to overtake the existing financial institutions. Or in the lending space, people are talking about how different banks could come together, share all this data on a general platform where those data could be facilitate, better pricing, more customized lending product for consumers, or in the wealth management front, you can do things like that as well. And if we look around, towards the retail customers, the commercial customers, the institutional customers, there's many potential use cases as well. And I think another use case that's worth pointing out is the capital raising, because traditionally that has been dominated or monopolized by the licensed players, whereas ICO is a case in point where this whole activity has been democratized in a global way. So yeah, I think the potential is huge.
Thank you. Ryan, you obviously come from a banking background as well, and he was my colleague at Citibank here in Taiwan as well. So from your old hat as well as your current hat, please share one or two use cases.
Yeah, sure. And sorry, forgot to introduce. I'm a former member in blockchain lab in CTBC Bank in Taiwan. And since financial industry is a century-old industry, and I think, in my opinion, there were so many areas they can use blockchain to improve the efficiency or reduce the cost. First of all, I will point out some potential blockchain use case. First is cross-border settlement, and the hottest project recently was JPM coin, JP Morgan coin, and Libra by Facebook. Yeah. Second was trade finance, a financial product called Factory. It's one of the most suitable scenario for blockchain lab, for blockchain technology. The third is insurance. Insurance can use smart contract to implement the settlement of insurance claim. The lastly is KYC, know your customer. Banks can use blockchain technology to unite the customer database in a platform, so they can improve their cross-selling performance and sell more financial product. Yeah, this is my opinion.
Thank you. I mean, you come from a holdings background and you come from a technology background, many years in financial services technology. Tell us what's actually happening or not happening, and why are you looking at specific use cases to solve what problem statements?
Yes, thank you, Malik. So with my data technology background at previously at Goldman Sachs as well as UPS, things that I see that have been the major showboxers for business expansion include data exchange and trust mechanisms across different entities or different business entities. So I think personally, really, blockchain will be able to provide a solution to solve some of those problems. So at Cathay, in my opinion, I think there are two major ecosystem or blockchain ecosystems that we're looking into it. One is the multi-sided parties or market rather, and the other one would be cooperative market. And for the first one, within that market, there are several or multiple entities who have their own specific business interest, but they all running or provide a single business environment or run the same business environment. And these include such as logistic, insurance or property insurance and trade financing. So these are some of the areas that we're looking into it. And as you can imagine, being a financial holding company, we're always constantly looking into solutions that can integrate the resources from our subsidiaries entities and try to provide one-stop services to our valuable customers and to be able to enhance their living experience under our financial infrastructure. So this is what I call it multi-sided market. And the other one is the cooperative market, where you can imagine those parties who join the same blockchain have the same business interest. And with this, one of the examples that we are interested in looking into, and just like most of the other banks or cross-border payment, you have all heard about it. And the other one is also is the KYC. And so those are the two areas that we will also be actively looking into it.
Thank you. And you made a very pertinent statement. In fact, a couple of keywords I picked over there. Better customer experience. And I think that is really so important. Sometimes when we get so swept in this whole debate about technology or philosophy, we sometimes forget the customer centricity aspect of it and putting the customer in the center, where the current processes and the current customer experience works, doesn't work, and how blockchain can solve for some of the friction in the whole experience. So thank you for articulating that and bringing that out. Thank.
Sure. I think that's a great point, Malik. And one of the things that we talk about at our company, both with our customers as well as conceptually, is incentive alignment, right? It's one thing to say that a technology is great for a bank, but will the consumer actually care? Is it actually better in terms of profits for the bank, or is it better in terms of experience, and why are they going to actually use the system? Because quite frankly, most of the time, whether it be the enterprise or the customer, the end solution is the most important. It's not how you actually get there. But we talk about blockchain as a tool to get to that end result. I think KYC is a great point, right? Because for banks, there's a lot of friction in taking in new customers and ensuring that the customer is who they say they are, that the fund flow is carefully audited, and that there's no funds from terrorism or money laundering. But we also think about it from the other respect, which is KYC AML is a cost to both asset management companies as well as banks. And that actually means that it's harder to distribute financial products. It's harder for investors around the world to get access to different products because the costs are too high. It's too hard to distribute, it's too hard to create. And directly tied to that, which I think is a great application for blockchain, is audit, right? We say it in terms of compliance as kind of like a whole, but in reality, the front-end compliance is a part of it, but it's actually being able to pull up those records, at will, pretty much. That is a heavy, heavy cost and burden on the financial institutions, which once again goes back to the cost layer of how can you make things so efficient that you can democratize financial services in a certain way, but also align the incentives with the financial institutions so they can provide these products and expand their offerings to different kinds of investors. So I think those two are probably the most important and align on both sides.
Thank you. And before we go to Jonathan, I just want to point out that was a really good articulation, because you mentioned this is very important point about incentive alignment. And I do want to point out that a lot of the talk today morning in the debate was about how inefficient blockchain is as an ecosystem in terms of limitations of number of transactions, et cetera, et cetera. And here you are talking about how blockchain can bring in more efficiency in the KYC process as just one use case. So I really want to point it out that when we start going beyond our ideological belief systems and philosophies, there are real problems that a technology like this can solve, and it can solve for current inefficiencies in the system. So I'm glad and I'm grateful that you brought it out. Jonathan?
Sure. So I think the fellow panelists up here have already listed out some great use cases of blockchain. Just want to add a small additional one. So that would be digital ledger technology as it pertains to not just cross-institution and cross-border, but also within corporations and entities themselves. So I'm aware that Hong Kong Exchange has already gone live with an internal digital ledger technology initiative where they themselves are already decreasing their overhead and their costs. That's a very real-world application of blockchain already. Looking out a little bit further out in the horizon, not too far, what I believe that blockchain can do for us is to rein in some of the incumbents that we see really aggregating a lot of the power. And where power is really becoming much more apparent is where people have, and institutions I should say, control over large swaths of information, data, privacy on all of their users. And when you look at how things have progressed over the last 10 years, you're starting to see the emergence of these major technology companies such as Google, Facebook, Tencent, and Alibaba. And what we're starting to see is really just the exchange of one incumbent, which are the major banks, with another. They look different. They claim to be a technology company instead of a financial institution. And if you look back just 20, 30 years, even the largest banks to this day that have garnered the most success, the largest user bases, they don't claim to have 1 billion users, but Facebook does, and Google does. And when they start getting into the financial services game, they're going to have a lot more responsibility on their shoulders. And I think blockchain has the potential to rein in the kind of bad effects that can engender.
Thank you. You made, again, a very interesting and important observation there about data democratization. And I think a lot of talk at blockchain conferences that we all go to is centered around financial democratization. And we heard the word choice come about a lot in the morning discussions, but this is equally important, data democratization. And the more we are heading into a world of data, there's this talk of data being the new currency or data being the new oil. So sometimes we lose track of that important aspect, that a decentralized ledger or a decentralized technology can take away power from some of the incumbents, not just from a money perspective or a monetary perspective, but even data sovereignty perspective. So thank you for bringing that out. Jeff, we were discussing earlier as well, and you've obviously interacted with dozens, probably hundreds of banks, and you've met all shades and shapes and sizes and many different experiences. So do articulate what's worked or what is working and what is not, as well as the why.
Thank you. I'd like to echo what most people have said, some very good answers. And I'd add that for me, it comes down to a very simple formula. It comes down to being faster, easier, or cheaper. Now, I have been in blockchain for a long time, and for my first couple of years, I would have a booth at a conference like this, and people would come to my booth and they'd say, it's decentralized, that's cool, or it's audible, oh, that's great. And people would come up and they would tell me that they loved my idea and they loved what I built, but there was no adoption. And I found out later on, there's a key word that I listen to when people come up and talk to me, and that is, wow, this would save me money, right? Because it doesn't matter how decentralized we are or how great we are or how much we're gonna change the world. After the ICO money goes away and all the hype settles, you have to do something real. And for the companies that are really adopting blockchain, it's because they're saving money. And there's a few other examples. Maybe they're helping their reputation or they're doing blockchain for security, but really 90% of the time, they want to save money. And so NIM is a smaller blockchain. I can give maybe one good example of a company that's built on NIM. That's Loyal Coin in the Philippines. They were an existing company that before getting into blockchain were doing points. They did over 1 billion transactions a month. And they were doing loyalty points for this company and that company and this company. And then they were able to add blockchain services to increase the utility, increase the speed, and decrease the cost. And so that's what I'm looking for when I'm talking to a potential customer.
Thank you, and you've really, kind of echoed the 3 keywords that guide me always: faster, cheaper, more efficient. And whenever we have any kind of a debate or a heated debate like this about good and bad, I think I always allow these 3 keywords to guide me. So all of you made excellent points, excellent articulations, made the whole conversation very real. Now I want to actually go a little deeper and ask Emma and Min. We've addressed a host of use cases across the value chain. Everything from KYC and digital identity all the way to trade finance and even supply chain. From your experiences working with the blockchain companies or DLT companies as well as with incumbents, tell us what are the 1 or 2 learnings when it comes to measuring success? And I think you mentioned it right in the beginning that success is a very relative term of whether this pilot was successful and should go into mainstream production or not. That's a question that most financial institutions are grappling with. Professor Rubini said that, he quoted a couple of studies saying that most of the pilots have not yielded result, perhaps because the banks are still trying to measure ROI in a very traditional way. Share from a practitioner's perspective, what should be an optimal ROI or success metric to say whether blockchain is working for us or not?
Sure.
Either of you can go first.
I'm happy to go first. I think it's a very, very difficult question. First of all, when it comes
That's why we are starting with you.
First of all, when it comes to banks, it's always about what's the top line growth, what's the bottom line number. And when you want to make an investment, tell me what's the forecast in terms of either cost you can save or revenues you can generate, which is a great matrix that has worked well for when you run a business. But I do feel when it comes to innovation, when it comes to new technology, there's a different sets of matrix that you can use. That's why for a lot of big corporates, in addition to the BAU investment and stuff like that, they also are starting to set aside money or resource to support moonshots projects. Moonshots meaning you can't justify, you can't measure by the traditional business matrix, but you have to look at it with an open mind and sort of like think about it as an emerging technology. And I think that should apply for blockchain. And blockchain's value, I think we all been talking about is the network effect, right? And there's a lot of potential in sharing your data and building common utility. So now a specific example is KYC. Right? As a consumer, we are all sick and tired of providing the same information over and over again to different banks and perhaps to different product departments within the same bank. But then nobody is willing to step up and say, okay, let's build a common platform, let's share our data so that it's better customer experience, because it's a utility, and none of the financial institutions will see this giving them competitive advantage. But it is in common good, and it's gonna make sure your customers stay sticky. So I think things like this, I don't have a uniform answer in terms of what would be a better matrix, but it requires financial institutions to take a greater view of the ecosystem. If you want to stay relevant, if you want to be influential, stay influential in this industry, it's better to get on there and start shaping standards than just kind of wait and see.
Thank you, and that's a very important observation, right? What is good for all will eventually end up becoming good for one as well. One should not be afraid of letting go, which is one of the biggest fear of banks. Min?
Yeah, I think I would, in terms of the ROI, let me share my thoughts here. And I think I will probably put it into two, both horizontally and vertically. In terms of the cost saving, where most people care, I think at this, especially at the beginning stage, is really difficult to measure. And I personally probably would not sell from that endpoint. Rather, I would say, because this is a network, so if you really wanted to look at dollar value, the cost will be distributed as well, right? So it will be shared by the parties who join the network. But instead of talking about cost, think about, for instance, from a banking perspective, banks usually has a traditional role of being an intermediate. And so who will do lots of operations through the financial or cash flow. So I think one of the ROIs that I would put in place as the measure of success would be whether or not you wanted to, or you have the vision not to be able to, or not to be disintermediated by the new entrants in the near future. So that's one thing that I think, as a bank management team, who should really look into this and start looking into this technology rather being afraid of being replaced for their traditional role. That's one area. The second area that I would put it into the ROI measure of success would be the volume. So I think most of the people know that one of the biggest challenges that when we look into the blockchain technology is who and how do we find partnerships who will be interested in working with us and join the chain. So because without the volume, there is really little benefit. So I think the volume would be the second ROI that I would put into this measure of success.
Thank you, and if only we could convince the bank CFOs to treat future-proofing as a viable metric of success and not just the financial ROIs, that would be important. You've articulated that well. We have limited time, so I want to jump onto the other side of the story, which is the challenges. Jeff, Sang, you guys obviously are veterans and experts in the industry working with the ecosystem players. Tell us one or two key reasons why, despite all that we've heard about efficiency and cost saves, etc., banks are still wary of going full steam.
I think there's complicated regulations. The banks already have, for the most part, a successful business that's making them money. And they don't have to jump out there and do something radically different to stay alive right now. So most banks are looking in the future thinking, maybe we should be aware if this is getting to be big, we want to be a part of it. But we're quite comfortable with the users we have and the services that we provide and the money we're making. They're basically already rich enough that they don't have to change their model. Now, if there is enough external pressure, if there's enough stress applied to their system, they will have to adapt or they will be left behind.
Thank you.
And I think it's also important to think about two things. One thing is the spectrum of financial services. So if we're thinking about banking, I think that starts kind of the chain of services that exist in the ecosystem. And then if you go toward the end, which is where primarily currencies spent in investments, that's where like asset management and products come out. There, I think you'll find more linear correlation with the success metric, which is I can save money during raising money, right? It's quite easy. I can use a tool if it's compliant with regulations. I'll use this tool, or I'll tokenize an asset, or whatever it may be, to save my KYC costs, and I can reach more investors faster, or I can make a new product that I can reach a new base of investors faster. So I think that's important to think about, whether it's a bank or where you are in that kind of horizontal chain of financial services. The challenges change, right? The incumbency of banks is different than the incumbency of financial institutions that are selling products. That is a hyper-competitive market that existence relies on bottom line tomorrow, not just brand equity, although that's important as well. And I think the second important thing that we have to think about is, what market are we talking about, right? Yes, you can send money via SWIFT. We were talking about SWIFT from bank A to bank B, but financial legacy infrastructure for the United States is very different from Asia, right? When we've seen it, Asia has leapfrogged past online banking, you know, with a laptop that I can't get into mobile. And we didn't see that adoption until very much later in the United States, because like Jeff amply pointed out, there's a lot more to lose at that point than just competition or becoming the next incumbent. So I think that I guess paradigm really has to be understood pretty well. Why, you know, U.S. banks basically have much more to lose, or any bank actually that operates in the United States needs a U.S. banking license, right? So you're complying with U.S. regulations, and I think you're going to end up in a place where that's so important to the financial infrastructure right now. It'll be very difficult maybe to change money immediately, but I think you may see faster changes in financial products than you will see in actual currency.
Thank you. And you made a very important observation, both you and Emma. When we try and see the value of this technology, it's not just across individual bank or banks, but we have to look at it from an ecosystem value chain perspective. Totally agree with both your observations there. Jonathan, we were talking earlier, and your company is a part of the Clayton ecosystem that was announced recently. I know there has been a lot of talk over the last one day about Facebook Libra, but this is another exciting development which somehow has not been discussed that much. Just a couple of minutes to share what's happening with Clayton and what's the way forward.
Sure, happy to. So just to provide a little bit of context here, and I think also to very nicely thread it into what some of the other panelists were talking about regarding KPIs. So I would agree, users as well as profitability are very key drivers of adoption and growth in blockchain. But I would change profitability slightly into compensation, because we're not just talking about profitability for firms and for entities that are trying to build things and build platforms and then think about users. It's also compensation to those users, to the users that are part of these ecosystems. And okay, let's say I do want to give you my private data. Do I get something for it? If the answer is yes, then okay, maybe I am okay with doing that. And I think these kind of new types of paradigms, I think, is what's necessary to think about how blockchain can remake the financial infrastructure. And a little bit on what Malik, you just mentioned. Ledger Capital is an ecosystem partner to GroundX Clayton. And so this is Kakao's public blockchain, which has already gone with their mainnet. They've already gone live with their mainnet. So they've essentially beaten Facebook to the punch when it comes to creating a blockchain-based payment system that can leverage a massive user base that is based upon their Kakao Talk, their Kakao Finance, Kakao Pay, and that's huge. Right, and so you're talking about adoption, you're talking about users, and where do they come from? Well, one way for them to arise is to have already a built-in user base, such as Kakao, such as Opera Software, and be able to leverage that and see how blockchain can enable better services and more fair compensation for certain aspects of user interaction on those platforms.
Thank you. You made another interesting and important observation there about value sharing when you said compensation, and goes back to what Sang has also said about incentive alignment. So we've made a lot of great points there, a lot more that I could have, and I wanted to continue with because of such a fabulous panel here, but unfortunately the timer says we are almost out. If I had to really distill this and share my 2 cents on why I believe, or where I believe the value of this comes to the financial services ecosystem and infrastructure, I would put it in 3 words. Transparency, auditability, and bringing frictionlessness into the ecosystem. And I think that covers everything from the best way to measure ROI, the best problem statements to solve, what are the use cases, etc. So I think if we can just put these 3 keywords as determinants of whether blockchain works as the best solution or not, we would be in a good place and we won't have to go into philosophical debates. But with that, we come to the end of our panel. Please put your hands together for our 6 wonderful panelists. Thank you.
Thank you.
Thank you so much, Kotadia. That was a great panel discussion. Again, thank you all 7 of you on stage.